Good morning, everybody. The 18th Thursday. The stream is live now. Patreon, YouTube, Discord, you know the deal. Welcome from all over the world, and good morning, good afternoon, good evening. Let's begin here with the SPY. Folks, before we begin, just to check on the sound and the video, if you're looking at the SPY 5 minutes chart, as I'm doing right now, and you can hear me fine, just give me a thumbs up in the comment section, and we're going to begin right away. Okay, thank you, everybody. Let's begin here with the SPY. The number of the day is 665, which really close to being achieved here. And then I think they're going to pull the tape down because if you look at the bond market reaction, it's quite different. You see the TLT down. You see even the long end of the yield curve now rebounding sharply. And you see even the short end of the yield curve. Perhaps the beginning of a bottoming formation here, and we begin to see the 2-year moving higher. My outlook would be that we're probably going to head back to these levels right here. So 3.67, 3.65. I think that's in probably in a few days. Next week, you're probably going to begin to see the 2-year moving higher. And that's going to pretty much halt the pop that you see here in the IWM. So I'm afraid that this reaction that we have today is sort of a trap because it doesn't have any confirmation in the bond market. And I think they want to suck some folks into today's session and then drop the tape down as we see yields moving back up. And you see it also in even the long end of the yield curve. So you see the XHB moving up here. I would say that's an opportunity to begin to buy some puts on the XHB with October's expiration, taking advantage of a pop today, because you're probably going to begin to see a reversal as we see a rebound in these yields. And the same thing, by the way, in the dollar. Well, we now know that we don't have this wedge pattern. We have a head and shoulder. We broke the neckline, went down, retested. If we close above the top of this candle today, then the dollar has further upside to go. If the dollar goes higher, along with bond yields, really hard to see how the equities market will continue to go higher without pulling back. So the dollar and bond yields are saying be careful of today's reaction in the market. You don't want to trust it too much. It could be because of options expiration, and the market maker here is trying to cover for some of the gamma exposure that they got already. Since we've already been above 660, why not cover for 65 before you begin to pull things down and exercise maximum pain on some of these calls right here. I think that's what's going on. And if you look furthermore, in the VIX here beginning to capture some steam. If we look at the actual VIX, it is trading a bit higher, rebounding, closing the gap from yesterday. So all of these indicators are leading me to say that you have to take the opposite side of the stock market reaction today and assume that it's going to reverse. So that's going to give you also opportunities for interest in certain trades. But the other piece of news is Intel and NVIDIA. So Intel, if we zoom out here to a daily chart, is it a little bit too hot? Yes, it is. And I mean, my target was, to be honest with you here, to close the gap. And I think that we're really close to going back to that gap again. So why not, if you go to Intel here and you have some shares, you bought them previously, you sell the 30 calls. Yeah, it is in the money. Not going to be exercised, though, if you go with an expiration date that is longer, October or November, in this case, December. I'm in a toss-up right now between November and December. Not sure which one I'm going to sell, because for $50 more, or less than 50 really, you go for 1 month more. Maybe that's a little bit too long for in the money sell. So perhaps I'm going to settle to the November expiration date. Either way, you raise about $400 here in this case. And since Intel is too hot and you're going to begin to see some profit taking, that's natural because a lot of folks bought right here. You're going to see profit taking. That's going to pull back and allow us to collect some premium. And with that, of course, you lock some of the gains you have in the chart. But the other name is NVIDIA. Does NVIDIA deserve to move higher like this? No, I don't think so. I think the China story for NVIDIA is more important than the Intel story. The investment in Intel is $5 billion, and it also comes with entanglements because you have to deal with all of the problems that Intel is dealing with. It's a really minor investment at the end of the day. Big for Intel, sure. Really tiny for NVIDIA. So I think that the China news is more important for NVIDIA than Intel, because that's more of a value from the company than the $5 billion spent on buying a stake in Intel. So here, my 2 cents would say that probably NVIDIA, not going to be able to hold. And if we close below 174 in today's session, my hunch is we go down, close the gap, and we head back to 165. So a trade that I'm eyeing an entry in today would be NVIDIA. I'm going to go to October 17th, and I'm going to buy a put right here at the 170, and I'm going to sell the 160. And that way I'm spending about $250 to make $750. That's a pretty good risk versus reward. Maximum loss would be $250, and the chance of profit is 32%. I think that I like this trade pretty much. What would be a good stop loss here if, let's say, NVIDIA wants to go higher? I would say if we close above these reactions right here, I want to show you this, so clean this up. You got an interesting reaction right here, a wick that shows you that we got buyers showing up. Then you see it again here twice in a row. You see it in the resistance side right here. So we know that this number is really important. So if we take the high of this number, 175, or 179 rather, if we look at the low here, 178.80, 178. So we might mark this number right here as your cut loss. So let's call it 178.5. Closing above, okay, now there's something different is going on, and you're probably going to see build up on today's reaction. So that's the trade that I would do. And if, by the way, if we go to 180, 170 something, the number that I gave you, I mean, your loss would be in the 20s, less than 30. So it is an ideal trade to be in. So that's what I'm going to do with NVIDIA before the end of this session. Let's go back to the 5 minutes. Another chart that I talked about today is Disney, the morning brief, daily chart. So you see here, you see in Disney, give it a minute so the moving averages can show up. But you have a topping in his shoulder. It's rolling off the 50 moving average, so it couldn't really close above the 50. That leads me to think that we'll probably have a revisit to the 200 days moving average. You're probably going to see a backlash about this Camel firing, right? So we might actually head down here to the 200 days moving average before we find support in the trade here for Disney. If let's say we go to October, let's start with October, then we expand to November. So if we go 115, 100, that's not going to pay much. So if you go October, probably going to be 115, 105. And the risk versus reward here is pretty good. If you're going to go to November, maybe you can expand it to the 100. And now you're risking about 4 to make 11. But another option that people would do is the 110, 100. I would say if you're going to do that, you probably want to go November or December to have a chance of profit above 30. I'd like to have my chance of profit in every trade above 30, because anything below 30, the odds are just not in your favor. So this is probably going to be a trade that I will enter, either the 110, 100 for November or December, or we're just going to keep it simple here, close to the money, 115, 105 for October 17th. And it costs pretty much the same entry. You see here the highs of the day so far close to 665, which is again the highest gamma exposure that the market maker has to accommodate for tomorrow. If you include today, let's see if that changes really. I don't think it's going to change much. Still, the 65 is the important number. So once they satisfy that, I think that we begin to pull back absent of a change in the bond market. So let's go back here. The dollar is not reversing much. The dollar is probably heading higher. And if you look at the TLT, heading down. So if you see the TLT breaking the lows of the day, yeah, you're probably going to see a flush in the S&P 500, because the VIX today is tied pretty much tick by tick with the movement in the bond market. So volatility, the VIX is wired to look at the bond market. And if you begin to see yields continuing to go higher, meaning TLT heading down, that's one indicator you can look at. My 2 cents were already satisfied. The highest gamma, probably head down. Would not be surprised, to be honest with you, if we see even closing the gap and we go negative for the session. That's a possibility. Now, let's look at, before we go to your questions in the comments, folks, let's do the movers really quickly here. Some of the losers, of course, ARM and AMD. That's based on the NVIDIA Intel news. UNG down today. Does it really erase the pattern? We're kind of dabbling with it here. So I would say if we lose the low of this candle, 75 today, if we close below, then you would probably want to take the bets off, because you're probably going to see more downside in that gas, even though the fundamental case is still intact. There's more demand from data centers on energy from nat gas. Minor pullbacks here. So I see questions about BABA and all of that. It's just, these are minor pullbacks after really, really elevated ratings that we see in the RSIs in BABA and Baidu. So that's normal. But the demand, see, I talked to the managers who are actually doing a lot of these big moves with billions of dollars, and they're warming up to this China story, especially if there is a deal or some sort of a framework, at least, with China. Then a lot of the fears of retaliation and delisting, which kept the managers not investing in these companies, they're going to go back to it. And any dip, they'll jump in and buy these stocks. So I would say right now, if you sold covered calls, you're doing pretty good. But you're probably going to see a dip, maybe let's say close to the 50s, 155s, 155. I want to say 150, but 155 will be a good number if we go down to and begin to bounce higher. You'll see the managers beginning to buy, so you want to still be with these Chinese stocks here. And of course, with the dollar heading higher, you're going to begin to see a little bit of, when yields going higher, you're going to begin to see names like high dividend paying Procter & Gamble heading down, Mosaic, which is sensitive to the dollar. But again, these are all minor declines, under 1.5%, so it's not really a big of a deal or a change of theme. On the winner's side, Intel, we talked about that. CrowdStrike has a piece of news and an upgrade today. Donut, Krispy Kreme, I mean, it's moving higher based on the FBI director saying that he owns the stock. I don't know how I feel about that, but I own the stock too. And hey, if you're going to squeeze it higher, then go ahead. We see AMAT and ASML going higher because of the news about NVIDIA and Intel. Etsy looking pretty good. So remember when folks bought Etsy right here, and then it went down and said, be patient, because this guy's going to go higher. It's really the fundamental, if you look at the statements for the company, it looks pretty good. You just have a cost problem here that is easily fixed. Micron is above where we needed to trade. So we're going to have to reassess. We're going to have to see how the close is going to look like in Micron, and then reassess whether we're a little too early for those call credit spreads, or we need to up the strikes, or do we need to go out entirely and then jump back in again. So we'll make a decision here before the end of the session. The crypto stuff is going to begin to move higher. So Coinbase, CRCL, these have still got plenty of momentum right now. And if you look at BTC, even with the dollar rebounding, by the way, you see BTC heading higher. So that's an encouraging piece for these crypto exchanges to begin to move higher, including, by the way, Hood, which could be considered as a crypto exchange too. So you need to, if you want to chase some upside momentum, I would say these names have at least some of the best cases right now to make in the short run. Moderna is another name, flushed down a little bit, but back on track. We got the 27 calls. I think you probably want to double down on those because we're going to head higher to 27 pretty soon based on the news that we have, whatever COVID, whatever we have right now. That's going to be positive news for Moderna. But besides that, folks, I mean, we see Sony. We talked about Sony before in the weekly. We're up at 30, so that's pretty good. We talked about Okta before. That's working out pretty good. RKK, that's gonna follow the IWM. So if you think that the 2 years is heading higher and will stay higher, then you're probably gonna see a pullback along with the IWM. Zinnia still going higher. So besides that, folks, you see some of these gains here. The majority of the market is up. But what really matters is the big names. And if they begin to pull back, specifically NVIDIA, then it wouldn't matter what the rest does. So Apple on the weaker side today. NVIDIA, I think it should weaken a little bit more. Volatility should increase higher as the bond market begins to go down. So my 2 cents here is we're probably going to top at 665 and begin to retrace some of these gains. Anyhow, thank you for being patient, folks. And let's go with your comments and your questions. Hey, Mav, I sold Alibaba at 155. Wait. Yeah, you can wait. It's a little bit too hard. Maybe you're going to go back to 155 and buy it at 155, or maybe you're going to buy it at a lesser price. But you did pretty good, so wait in the sidelines a little bit more until the dollar cools off. That's probably going to be your guidance. When the dollar begins to cool off and reverse, you're going to see BABA heading higher again. And the same thing, by the way, in USAR, URA. So all of these are going to be really sensitive to the dollar. They don't like a higher dollar. But once the dollar cools off, USAR looks pretty good for a pop. And I think that option traders and some squeezing will happen to push it higher. So I'm not worried about this one right here. But maybe GDX, or in the case of URA, a little bit more sensitive. It's going to be a little bit more sensitive to the dollar. So right now it's looking okay. But you probably want to hedge until the dollar cools off, and then you want to add to these positions. Caterpillar, what about Caterpillar? Caterpillar looking pretty good. It's one of those names that are resilient tariffs, as we've seen before, as expressed to you before in the video. The tariff-proof portfolio, and the reason is they can raise the prices and get away with it. So for now, it's okay to have Caterpillar. You just want to maybe book some profits via covered calls. So here, if I own shares of Caterpillar, I'm probably going to do something like this. Caterpillar, we're going to sell calls, especially with the name trading at 460. You can raise a lot of cash. If we go, let's say, October 17th, if you want to go to that expiration date, you can sell the 470 and raise about 900. You can go in November and maybe go with the 500 at that point and raise about 800. All of these are pretty good options because it's a little bit too hot. You might begin to see, with the dollar going higher, you might begin to see that, we have some worries about the margins for the company getting worse, and we see a pullback. But that's what I have to say about Caterpillar. Now, JPM probably going to do pretty good with steepening of the yield curve. So the banks are okay. JPM, a little bit elevated, to be honest with you. So I'd rather go with the XLF if you want to do that. Go with the XLF. It's just a much better looking chart and cheaper to buy options in or to buy shares in. And you could see a break to the upside. Even the JP Morgan stalls or pulls back a little bit. So XLF over JP Morgan. Mav, can I hear your take on COP? This is ConocoPhillips. I still like the name, and I want to have a position in Conoco. It pays a pretty good dividend. Don't forget about the takeover of Marathon that happened last year, I believe. That just expanded their resources even more. What we need to see, and we're seeing good signs, by the way, with the 30-year getting higher. Crude oil should be able to find a footing and begin to move up. If that is the case, that should be pretty good for COP. But right now, I want to make sure that this is right here. I have to clean this up to see it better. I want to make sure that this is not the dreaded bear market or bear flag formation. So to defeat that, we need to take the highs of this candle right here. That'd be about 95.20. So I want to buy at 95 and above. If it closes above 95, I would say we're safe, we're secure, and probably going to begin to see energy heading higher. I mean, you could look at this chart right here, plug in your moving indicators. You're above the 200. It's going to take a little bit of time, but I think that we're heading toward a crack above the 50 and then the 200 from a weekly perspective. And you can see here that we got a declining trend that we kind of broke above. And so long as we maintain that, to break above the 50 and the 200 in time. And once you break above the 200, it's all the way to the moon. It can go higher as much as it can. That's going to come hand in hand with a rally in crude oil, by the way. So that's my take on COP, Conoco. Hey, Mav, what do you think? What do you think we should expect from USO? So we just talked about crude oil. I think that if you begin to see, as we're beginning to see right now, the long end of the yield curve here in the US, heading higher, crude should do pretty good. Now, palladium, on the other hand, it is doing impressively right now, finding support at this gap, even with the dollar showing strength. So for now, I say we're okay. But if we begin to trade below this gap, then the dollar is probably going to get more aggressive. The rebound in the dollar will be more aggressive, and that's going to have a negative impact on palladium. But so long as we keep that support, I'd say, okay, we have maybe another ABC, and palladium heads higher. Here's the SPY weakening a little bit right now as we see volatility heading higher, bond market weakening a little bit. Let's check on the dollar because that's going to be really important in today's session. So if the dollar begins to challenge the highs of the session and trades higher, that's going to be a problem. You got to remember that we have the European close coming pretty soon. And once we see the European close coming, you're probably going to see more demand for the dollar. And that could be problematic for the market. So the European close is an important event in today's session. Mav, why in the hell are in home builders down with a 10-year up? They're going to be down, okay? So think about today's session as an opportunity for you to begin to buy these bearish trades. Think about it this way. I mean, look at what happened already since we began talking, right? So today's a trap. Today, they're trapping a lot of people to think that, oh, the Fed cut rates, but watch what the bond market is saying. That's what really matters. And right now, the bond market is saying, no, short the XHB. We gave you a chance today. I mean, we checked early in the session, the XHB was up about 0.8%. Now it's down, probably going to flip to negative. So you want to use the opportunity to short this stuff. We see the SP wind down. There's nothing really important news going on right now. We have the conference in the UK. I'm watching that right now as we speak. Hey, Mav, what is your take on Netflix, shorting Netflix as digital piracy is surging and them not being able to raise prices anymore? This is really a good question because I've been dabbling with it too. Is it a good time to short Netflix, though? I agree with you that they're not going to be able to raise prices anymore as consumers get weaker. Okay, so no more expansion of the revenue. At the same time, you're going to begin to bleed a little bit on your members, the subscribers. That's natural, so that's going to happen. So expansion in the revenue is going to become a problem, but it's easy for these companies to compensate for that by cutting costs and expanding the profitability. And they can do that by cutting some projects. They could do that by reducing the headcount, for example. They can get better numbers. So in the meantime, shorting Netflix is not a good idea, because the other thing is investors, when we have times of uncertainty and you have, for example, the growth stuff being way too high and overvalued, if you want to look for stability, you have it in Netflix. You still have a lot of cash flow showing up every month, and the business is stable. I think that Netflix will begin to have a hard time once we begin to see the unemployment rate heading higher meaningfully. And we haven't seen that yet. The biggest threat for Netflix is if the subscribers begin to cancel out of financial concern, to say, because right now folks just throw the credit card, they have the Netflix membership, and they don't care about paying the $20 a month, even though they're not watching Netflix, because, be honest with you, I mean, they're not really producing anything good as of late. Haven't watched Netflix in a while. But when your financials get tight, you begin to question. You begin to say, okay, I haven't watched Netflix in a while, so why am I paying $25, $20? I got to cancel that or reduce. And that's not going to happen, that kind of thinking, until we see the unemployment rate moving higher. So right now, as we speak, I would say don't short Netflix. Just do some put options if you'd like, some options trades, that's okay. But short, it's a little bit too early. Moderna, what trade would you recommend entering right now? So we've done a trade on Moderna, and maybe you're going to get it at the same price, if not even better, than what I got. Because it's, if you go October 17th, and then actually went to a shorter expiration date, but anyways, let's go with the 27 here. That's the resistance that I see. I think we went with the third. Let me check on that trade. $26. We went with the 26, which I think is a little bit too short. Yeah, you can get it for a really attractive price right now. To be in the safer side, to be honest with you, it could happen. I'm not saying it's not going to happen. It could happen pretty fast, but I would say to be in the safer side, give it another week. 27 naked, you're going to pay about 115 here to get in. That's a pretty good price. And I think that there is a catalyst here. And again, remember, this name is heavily shorted. So any good news could squeeze the shorts and give us big pops in this name. A little bit of weakness showing up in the SPY here. Let's take up 50% on NVO 60. These are the calls for 326. Do you see further upside, also close versus exercise at a later date to keep the shares? So we got some good news about NVO today. We have to look at the chart though. Look, I think the problem with NVO is they lost a lot of advantage in the U.S. market. So you have the 60 all the way to March. I would say right now there's no sign of a reversal, at least in the weekly chart. You want to look at the weekly chart. That's the one that's going to be relevant. But my 2 cents, I think NVO will probably consolidate, if not head down more. But right now, you could see a move higher all the way and retesting here, the highs of this reversal candle at about 70. So you could see a little bit more gains to come. But I would say if you get closer to 70, just book the trade. You don't need to exercise, because this one is losing a lot of relevancy. And when you see the weekly chart where the 50 is crossing below the 200, that's not a good sign. That's going to show that the dip's not an opportunity to buy, and you're probably going to see more sellers as this guy moves higher. But you could squeeze a little bit of more gains here in the next few days, next few weeks. I would say stick to the options trade. You get closer to that 70 number, just book it and get out. At that point, you'd probably be up 100, 150%. That's pretty good. PDD 140, 155, call debit spread, aggressive enough. PDD. I would say you need to, I mean, PDD is a catch-up trade, right? So you might not be too concerned about the dollar. So let's see here. If you got PDD and you go with the 140, the problem with going out of the money like this is if there's a pullback, you're going to pay a lot for it in terms of decay. So if you go October 17th, for example, let's say go 140 and then sell the 155, You're spending 2 to make 12, 1,300, chance of profit 25%. We want to improve these a little bit more. So you could go to 135 instead, closer to the money, and then do the 135, 150. Now you have a better chance of profit, 35%. You're risking 350 to make about, let's say, 1150. Not a bad risk versus reward. You can reduce your cost a little bit more by going with the 145. Now you're spending 280 to make 700, chance of profit 36. So I do like these two trades here. Up to you if you want to initiate the trade right now or wait for the dollar. I would say a lot of people want to chase the ADRs, the China ADRs. They're probably not going to wait for the dollar to cool off. They're just going to chase it right now. So I would say if you're intending and entering 135, 145 for October 17th, and you want to buy, let's say, 4 contracts, I would say buy 2 now and then 2 later after you get a confirmation. Just in case you get a pull back, you can add at a cheaper price. Hey, Mav, I have QBTS 17 and a half calls, September 26. What is your view on it? Usually I would book, but it looks really strong, and I think there's more room going up. QBTS 17 and a half. So you got to remember that you have a short time till the expiration, and you're already deep in the money, so you're not going to see a lot of appreciation in the time value. It's all tangible value right now. I would say book. 2 cents would say book. If you still like QBTS and you think that we have more gains to come, so you have the 26, 17 and a half. You can collect about 590. Then you go to October 17th and you expand it to the 25. So you're going to use a portion of your profits to keep the trade alive. You can even reduce the cost a little bit more by selling the 30, for example. Same expiration date. Now you're keeping, out of the 590, you're spending about 110 to keep the trade going for all the way to October. At the same time, you're locking in some profits. So what's not to like here? Rigetti, by the way, is another one that's just blowing up higher, and I think that we could see more gains to come. This quantum computing theme is heating up tremendously. So I agree with you that you got to have exposure to quantum, but maybe you're a little bit too hot right now. And a lot of these moves, by the way, are happening because of options activities. So once you get elevated the IV ranks, you have to look at that. You have to look at options here, then go most active options. They're probably going to give you the IV ranks and whatnot. So here you see Rigetti should be, Rigetti 42. So we could see a little bit more gains to come in Rigetti. And I don't see QBTI here. It's probably too small to show up, but I would look at Rigetti as my guideline. You could see a little bit more upside to come, but if this one heats up and gets to the 80s pretty soon, then it's time to get out. That's my take in quantum. Thanks, Mav. Potential ETH plays guidance. What is the best play barring share in SBET or ETHT? Selling volume via puts, buy cheaper puts at an inverse. It's a little bit too complicated. So if you're gonna go with the Ultra Ether ETHT, I agree with you that right now we probably have, if we clean this up, you probably have sort of a cup and handle. And I would go with an aggressive play for Ether like this. If we go to the cryptos, ETFs, see if we have, they don't show us the Ether. They show Bitcoin. Yeah, they don't show us the Ether. But I would say you really don't need to hedge a lot. The ETHA is more disciplined as a play, and it's more popular, cheaper to enter. Either way, it looks pretty good. You need exposure to Ether right now. Cryptos, Coinbase, Circle, Bitcoin, all of them I think will heat up right now. So we want to add exposure here. And I'm just going to add naked calls on it. I don't want to have any complicated strategy or hedging because I think we have an explosive move to come. And just grab a seat in it and don't worry about hedging too much here because I think we're heading higher. So ETHA, even if you want to do the lever, that's okay with me. Hey, Mav, Netflix Iron Butterfly down with one more day to go. How do we handle? Since we're getting really close to the expiration date and we could see a pullback in tomorrow's session that gets us really close to where we got it. Let's check on the trade here, see how much we have on it. Netflix and Iron Butterfly this week at the 1200. And then I believe that we've done a 20 delta. So here it's going to be 20 and 80. So we have 17 in credit here. We collected 16 and a half. We want to see deterioration of the value, not expanding of the value. But here's the good news. We could see, if we see Netflix, for example, pulling back in tomorrow's session, and it's closer to, let's say, 1,210, you're probably going to be able to book some of that value. So right now, since we have a lot of decay in the value of these options already from the time perspective, it becomes all about the tangible numbers value right here. So I think we're going to see a pullback in tomorrow's session. And if we do, we're just going to collect some premiums out of it. So I'm going to keep it as it is right now until the expiration date. Since the max loss is already in, you don't want to do too much with it and book the max loss. And you wake up tomorrow and you see Netflix, for example, pulling back and now the trade is profitable again. There's another way you can deal with it, which is expanding the trade to a longer expiration date, closing the old one and expanding to a longer expiration date. Maybe that's going to be an option for us to do in tomorrow's session, where we close the one that we got, take the loss, and then open something else with different strikes, rather, and make up for the cost and try to collect some premium. But again, it's a desperate strategy. It's a last resort, really. For now, I would rely on a pullback tomorrow and collecting some of the premium. SPY consolidating here. Let's see what the VIX is doing. Okay, consolidating. TLT firming up a little bit, which the market would like that, but the DIX is also firming up. So 2 cents. Let's go back here to the TLT. Mehmet, you say, Mav, I don't understand the euphoria which continues happening in the stock market despite the bad news. Bad news is good news is good news, no news is good news. When this all will finish? When you say when this all will finish, you look at the S&P, right? Let's look at, Dow Jones or S&P. You see the big weight here of the one name and its associates. Right, so this story right here is beginning to get damaged, by the way, from the cannibalism, from the China. But you have to understand that sometimes when you get a piece of good news like this, at least perceived as good news, you're going to see some options activities. The majority of the market right now is moved via options. And if you trigger a gamma for the market maker, they're going to have to move it higher. But at the end of the day, so I don't want you to short the indices until you get a technical breakdown. Then you have a permission to short the indices. Right now, if you want to short anything, you short based on weakness. When you see weaker names, you short them, you do trades. But unfortunately, a lot of traders are just fixated on shorting the SPY or the Qs. And when you look at a map like this, even the NASDAQ, you need to see the majority of these components down, at least the big ones, NVIDIA, combined with Google and Meta. You need to see these down for the NASDAQ to begin to trade down. So we have a weight problem here. And shorting the indices are only going to be appropriate when we see the VIX moving higher at a new level. And right now, the VIX, if you go back to it here, it's rebounding, but it's not above 17 and it's not above 20. These are the two numbers we need to hit before we get to see the indices selling off with all of its components. So, again, for now, as an investor, you have options. You can buy certain stocks that you like. Or INTC, for example, was a good choice. So if you have a theme that you still like, you can do that. But right now, for example, a good short would be, since we see bond yields moving higher, XHB shorts will be okay. Even IWM at some point will be okay to buy some puts on it. So you want to concentrate on your short bets on these individual themes right now. And once we see volatility moving higher above key levels, that's going to trigger a sell-off that is inclusive. Then at that point, you want to short the indices. But one mistake that we do all the time is just concentrating on SPY puts or Q puts. That's going to require a lot of components to go down at the same time. And that's not going to happen without a volatility event. For a pullback play for the SPY, should I play next week expiration Friday? See here, we're talking about the same problem, right? So I don't want you to be fixated on the indices, folks, because you could make money here, even the short side. If you shorted AMD, for example, today, you could have made money on the individual names like Oracle if you sold some credit spreads in some of these names, but you don't want to really play with the indices too much. You need to see a break, a close below a previous low before you begin to see an opportunity for a short trade. And we haven't seen that for a while now. If you look at the daily chart, for example, you need to see a close below the lows or at least the close of a previous candle. Haven't seen that for a long time. We've seen it here and it produced a pullback. We've seen it here, produced a pullback. We've seen it here, produced a pullback. But until you see it, maybe it's going to come tomorrow's session. It's just not the appropriate time. Mav, you think cryptosphere will go up during the next pullback? Crypto could act on its own because it's been lagging gold. And I think that you probably want to have some exposure. So Ethereum is pretty good, looking pretty good right now. We just looked at the chart. The crypto exchanges, Robinhood, Circle, or Coinbase, probably the highest quality. I think all of those will be okay if you want to grab some calls on them with October's expiration. CRCL, high OI, the 150 for October. Do we do a butterfly? CRCLs. Okay, if you want to do a butterfly, you have to be careful here because you don't want to go above the number pretty fast. So you have to pick your butterfly, the body of the butterfly at a certain resistance level. So if we do CRCL and we do a call butterfly, let's say you want to go next week, right? You don't want to play with it for too long. So you sell the 150, you have the 140, you buy the 160. Now it costs you about 141. You have about 28 chance of profit. Maybe you want to expand this a little bit more, have a 15 delta in this case, because this is a high beta name. And in this case, if you do that, you're spending about 300 to make 1200, right? And you have a 43 chance profit. So I leave the decision up to you, but it's either the 140, 150, 160, or the 140, 155, 165. You can even go to 170, but in any case, up to you. But I think that we have more upside coming here in CRCL. We're going to begin to face some resistance at about 160-ish, 155. That's going to be a sticky point of resistance because you have it right here as support. And you have a little bit of tails that are showing up in these candles. So we know that we have a little bit of resistance right here between 150 and 160. What to do with Tesla? TSLA, we stay to the same thing. We're probably going to book the TSLA by tomorrow's session and then concentrate on the call credit spread. How would you play a possible rebound in VKTX? Playing a possible rebound has to be via call options. Has to be, but remember, this one closed below the lowest tail right here after the crash because we got the bad news. So this one is not something you want to own at this point. If you want to trade it, I would say probably via call options. So it's going to be something like this, VKTX. And I'll go to 17th, for example, clean this up. In this case, you don't want to go too far out of the money, so 25 would probably be a good choice. 25, 146, that's what it's going to cost you. And the chance of profit is 31%. That would be the only viable trade that I would see. And if you have a short squeeze situation, for example, and you're back at 28, trade is going to be pretty good because 28, that's going to give you about 100% profit. So this is the trade that I'll probably consider. Michael, are you a fan of SoFi? Well, SoFi is going to be really sensitive to the short end of the yield curve, right? So it's going to trade along with the IWM. And honestly, the name been way too hot this year. Uh, it has versatility that I do like, which is it tracks small caps. So if you have the right conditions for small caps to go higher, as we've done in the last few weeks, that favors SoFi. It also has exposure to the banking element, which benefits from a steeper yield curve. So it is a really good play under the right circumstances. But right now, I think the biggest risk that you got is the 2-year beginning to rebound, finding a footing. And I think we might head back to 3.65. If that is the case, you're probably going to see a pullback in SoFi. So I would say why not, if you have shares, sell covered calls, book some profits, wait for a pullback if you want to enter the name. But to me, SoFi pretty much tracks small caps. If we plug them in together here, you can see the correlation. They track one another. Because if you add another chart here, the 2-year, you'd see that every time it goes down, these two accelerate higher, right? So when you have a move higher in the 2-year, once in a while you see them trading higher, but for the majority of times when we see the 2-year moving up, these smaller banks and the small caps begin to trade down. So I would say if we have a rebound here in the 2-year, you're probably going to see pullbacks in both the IWM and SoFi. Keep it at the SPY here. What do you say about buying open puts? Tomorrow's expiration, next week, month, never. This is a casino right now. Open Door is one of the hottest casinos in the market. I mean, you see it been up and down, and a lot of people getting killed here trading these options. They're hot, but I would say your guidance would be you want to look at what they're betting on. So the gamma is going to be really important in a name like this. So we look at the options pricing and we're looking at the expiration date of tomorrow. They're closing in the money calls. That's not a good sign. They're opening out of the money puts. Not a good sign. And they're opening at 9 here, a lot of them. So my 2 cents would say that a lot of people who made money from it this week are booking profits. And you're more likely than not to see a pullback in tomorrow's session. Looking at the gamma exposure, we're already above the highest gamma. And again, from a max pain perspective, if you're the market maker, what would you do? You probably want to push it down a notch here to make sure that this expires out of the money. And when you push it down, you're probably going to have to accommodate this guy right here, which is the 9 strike. It has a big number of open interest. So here, if I have to do a trade about Open Door, I would probably just roll the dice on the $9 puts. It will cost me what here? 14 cents or so. Less actually, it's about 12 cents. See how these are going to work out. You don't need to spend a lot of money on a lotto. 12 cents, that's pretty good. So just grab a lotto on it for tomorrow's session. That's it. Yeah, we talked about SoFi, overbought, and I do like it in the long run under the right circumstances, of course. So you want to see those yields going down to keep the name going higher. But right now it's just a little bit too hot. So something that I would do if I was a shareholder is going SoFi and maybe go to October and we sell a call at 30, for example, and we raise about $100. And again, you wouldn't mind selling at a profit either way, and then you can buy it back if you'd like. But this is one way to lock in some profit. If you want protection, if you think that it might go down, you could actually go ahead and I would say good protection would be 25 or 26. So if you go with 26 as your insurance policy, you're getting it for free, right? You're getting pretty much a credit of about $1, and then you're using another $1 here, so you're not paying anything. If you go to 25, you're getting a little bit of credit. You're getting paid to have the insurance policy. So hedging is really important, especially if you see yields heading higher. Here's the SPY. Let's look at the TLT. TLT moving up, so it's giving the market a little bit of relief. But if the TLT begins to head down, then the VIX will begin to head higher, and that's not going to be pretty good for the market because rebound in the VIX equals bad news algorithmically. So the dollar also going down is good for the equities to rebound a little bit, but if the dollar finds a footing, begins to trade higher, the algorithms will sell the SPY because they're going to pump the VIX higher. That's the dynamic of the day. That's how the algos are wired for today's session. So keep an eye on these relationships that we have TLT, Dixie versus the VIX versus the S&P 500. Mehmet, despite big SOXX bearish trades, SOXX and SMH are going higher. What do you think when expect a 10% correction in chips? We're too high without pullbacks. I do agree with you that we're too high, but today we have that news, the NVIDIA Intel news. So I would say once again, concentrate on the individual names, not the ETFs. Because with the ETFs, you need all of them to go down together. And if you have a few names, smaller names like AMD down, but you have AMAT and ASML and NVIDIA and Intel going higher, the ETFs will go higher. The ETFs are really hard to nail until you have a volatility event. But if you want to short based on the individual names, I would say that AVGO is a candidate. If it breaks that trend line, we have further downside to come. AMD, we talked about this before, that it is on the weaker side. So now with this news, if we break the lows right here, that we got some support from, so the low would be 149.20. If we go back again, 149, probably going to see more downside to come at this name. I mean, Texas been weak. Qualcomm, I would say it's another candidate that could be topping here, beginning to head down. So you have to pick on the individuals on your short trades and avoid the ETFs until we get a volatility event. When we see the VIX breaking above an important level of resistance. How long do you think small caps will stay elevated until the next Fed decision? No. You gotta look at the 2-year. Where do you think this guy's going? I mean, it found support. If it wanted to go further to the downside, it could have. I mean, the Fed cut rates yesterday, yet we see it going higher. And I think that the Fed tamed a lot of these expectations. So we have this zone to visit. That's going to be number 1. And you see here the wicks. So this is a really important zone right here. And I think if we have a rebound in the 2-year, by default, the IWM is going to pull back. So again, like I said from the beginning of the show, I think today's action, especially in the IWM and the XHP, is a trap. You don't want to go against the bond market here. I think this is what the traders are doing. They're buying the IWM even though the bond market is saying, no, I'm not giving you a confirmation. It could be the same case in the SPY, by the way. If you see the TLT heading down, as in to suggest that the 30-year bond yield is going higher, the Dixie rebounding higher, the VIX moving up, then maybe all of this action that we've seen this morning is a trap. Maybe some people who don't really understand the impact on the yields, and they just hear the headline that the Fed cut rates by 25 basis points, and they begin to buy the futures, they begin to buy equities. But once the European close is done, you begin to see the professionals saying, okay, thank you so much for the pump, let's dump it here, because the bond market is not confirming. TZA calls for next week in order. Yeah, we'll keep them. We're probably going to double down, triple down on them in today's session. If I continue to see that yields are heading higher, we're probably going to double down on those. Patreon gang. How about Discord? Okay, we talked about VKTX Cloud. Just not a fan right now. Maybe you want to open a naked call, not a spread, a naked call. Give it a shot for October 17th. Now, what about MELI? You know, a lot of the big fund managers are buying this name. And I think that it will move higher. The problem with this guy is it's just too expensive to enter. So I would say a better trade, to be honest with you, a cheaper trade would be the EWZ. It's been hot. You see this, the inverse in the shoulder. and it's probably going to begin to head down even more. Okay, so I have my markings here a little bit off because I have the adjusted chart, but it is facing a little bit of resistance here. If this guy pulls back, if you want to have exposure to Mercado Libre and other Brazilian stocks, just buy the EWZ. I mean, it pays a pretty good dividend, pays about 5%, and I think that we have further more upside to come, because if you look at the monthly chart, Brazilian equity has been suppressed for a long, long time. And I think devaluation of the dollar is going to be pretty good for them. And I think the trade war is going to be pretty good for them at the end of the day, because it elevates the prices of coffee, the prices of OJ, the prices of meat, the prices of all of these commodities that Brazil tend to be an exporter in. And now we have the demand for China increasing. Instead of buying U.S. soybeans, they're buying Brazilian soybeans. So I would say that EWZ is probably one of the best ideas and the least appreciated right now. Once again, folks, before we go, I want you to keep an eye on these three things right here. VIX, if it continues to move up, if it breaks, VXX, if it breaks this resistance right here, the highs from the close yesterday and the highs of today's session, then we got a problem. Then the SPY is probably going to give up the gains. You got to look at the Dixie too. If the dollar begins to rebound, especially after the European close, if we begin to see dollar rebounding and retracing, beginning to retrace the highs, that's going to be a big problem for the indices. Same thing with the TLT. If we break today's or Thursday's lows, so if this one begins to head down or break Thursday's lows, it's going to push the VIX by default to the highs, and that's going to be a problem for the SPY. So watch for these indicators, the three, VXX, TLT, Dixie. And if we begin to see these moves, we probably have a trade on the SPY here, betting on closing the gap, and that's going to be probably the 660 puts for the expiration date tomorrow. We buy them, we're probably going to close them before the end of the session. But you need to get these confirmation first from the indicators before you do that move. But besides that, folks, if you don't have any more questions and comments, we're just going to wrap it up right here. But we're going to be back in the chat session in about an hour. So we'll see you then. Hope you got some good information from this stream. We'll be back in an hour, and good luck with the rest of the day, folks.